Bartosiak with trending stocks at Zacks.com. Can you hear that? That distant, faint sound of a slow and painful death in the metaverse? Yeah, that's the sound of Mark Zuckerberg getting torched for billions of dollars. Meta, the company formerly known as Facebook, not to be confused with Alphabet, formerly known as Google, reported earnings the other day. The company reported EPS of $3.67 versus expectations calling for $3.79 on revenues of $33.7 billion. Now the bad news was guidance was dropped to 27 to 29 billion for next quarter. That's not a good thing. That sent the stock tumbling dramatically, crashing all the way under $240. We're talking 25% to the downside. Now, Meta was only one of the recent victims in the tech space. PayPal, Spotify, and Block have all taken tremendous tumbles. Of all these once fair weather tech names, which of these dips should you just clog your nose and buy? Let's take a look at Zacks.com to try and figure it out. So here we can see the carnage in Meta. Zacks rank number 3 hold following the report. Decent style scores, B for value, B for growth, A for momentum for that BGM composite score of A. Just pointing this out. How on earth could this thing have an A for momentum? Well, that momentum is all about earnings momentum, not price momentum. So that's why we have that there. You can take a look here on this chart. This was a stock, first of all, it was trading up close to 350 coming into this year. Ahead of the report, 330, and today we're down 235. So the mighty have fallen. Still, if you look at the estimates, pretty good here. You know, revenue estimates for the current year, 12.8. Next year, 17.51. It's just, look at these earnings. I mean, just stagnant. You know, I mean, current quarter is going to be a loss. Next quarter is going to be a loss after that. Still hoping to get it next year situated, but overall, it's not what you want to see when you're looking for that growth, and that's why Facebook took a tumble. PayPal, same situation. This was once the darling of the market, and they had a nasty report with the stock close to 180. Now here we are, $1.25. They have already dropped down to a Zacks rank number 4 sell. That means analysts have come out and cut these estimates. How nasty have the cuts been? Over the course of the last 30 days, you have 4 analysts cutting for the current quarter, 4 for next quarter, 7 for the current year, 6 for next year. Look at the impact on the consensus, down from 587 to 506 for the current year. Next year, 724 to 632. So important to note, there's still growth, right? We still have 24.87% EPS growth for next year on 20.42% revenue growth. So the growth is still there. Stock has taken quite the tumble. Could the worst be behind it? Then we have the company formerly known as Square, now known as Block, up big today here on Friday the 4th because Bitcoin is making a move. Again, Zacks rank number 4 sell. That's going to be because of analysts. And just look at this downward action. I mean, top left, bottom right, cut in half. That's not what you want to see, okay? Doesn't take a rocket scientist to figure that one out. But look at this. Earnings estimates. Contraction for next year? No, sir. Only 4% revenue growth for next year, too. That's why we're seeing these consensus estimates come down and seeing analysts cut their estimates. And this number keeps dropping. And folks are no longer a big proponent of Square, also now known as Block. We can throw that down the block. Now let's look at Spotify, the last of the downtrodden names that have been beaten into submission. Zacks rank number 3 hold. That used to be $280. Now it's $1.73. However, there's actually a beat here. This little green guy, that means there was a beat, an earnings beat, an earnings surprise. How big was that surprise? 46% upside surprise. They came in with a 24% loss versus a 45-cent loss. That's better. And if you look at the consensus estimates, we do have some brave souls coming out, pushing up those numbers for the current year and next year. Next year is really where it's at, going from 207 up to 217. And that's from 69 cents this year. Look at that growth, folks. Do not adjust your TV sets. up from 156% growth this year. Big number. It's going to be bigger next year. 214% growth. Monster growth numbers on the earnings side. Also, really solid growth numbers on the revenue side. 15.47 for the current year, 17% for next year. So if I'm taking a look at all of these stocks that have taken a tumble, which one do I want to just close my nose and buy the dip? I think I'm going with Spotify, ticker SPOT. Every time you share this video, somebody's mom tries to friend you on Facebook. Subscribe to the YouTube channel, Twitter at Bartosiastics, and check out Zacks.com/promo for this week's deal on Zacks Ultimate. We'll see you next time with trending stocks at Zacks.com. I'm Dave Bartosiak.